Hi, Ken Heinz here, HFR President with the July 2021 HFRI 500 Performance Report. The HFR 500 posted a narrow decline in the month of July, the first decline in actually 9 months. And July was kind of a mixed month, really seeing a continuation of some of the trends we saw in June, where we saw a reversal of the reflation trade, interest rates falling, and you saw mixed equity markets where throughout most of the month equities were actually lower, and then based on strong earnings you actually saw a lot of equity markets settle with small gains for the month. You can see here the HFR 500 declined less than 0.5% in the month of July, and you can see that all 4 strategy areas actually posted decline, but none of them declined greater than 1%. You can see here we have the macro index down just about 16 basis points, while we have equity hedge, relative value, and event driven, the lowest of those being event driven, which only declined about 76 basis points for the month. And again, first decline in 9 months for the HFR 500. Drilling down to the sub-strategy level, you did see some strong performance in the month of July, which we've highlighted here on this slide. It was led by the HFRI 500 Equity Hedge Multi-Strategy Index. The multi-strategy is a specialized roll-up of funds that are investing in each of the underlying 7 sub-strategies of equity hedge. The second best performance, which you see here, is actually an equity hedge sub-strategy, which is quantitative directional. And the 2 other leading areas of performance, HFRI 500 Macro Systematic Diversified, this is the trend following CTA strategies, and the HFR 500 Activist Index, which is also a strong area of performance in the month of July. Looking back at the strategy levels, but focusing on a slightly longer view of time, being the full year 2021, year-to-date results of 7 months, we can see that the leading areas of performance have been the event-driven and the equity hedge strategies. It's not surprising that these are the leading areas of performance, because these are where heavy concentrations of some of the out of favor, deep value, heavily shorted equities actually reside. Focusing on the year-to-date results for the at the sub-strategy level, you can see here the leading area of performance are activist, equity hedge multi-strat, macro commodity, and event-driven distressed restructuring. And this isn't a surprising development at all. The reason this isn't surprising is that we've been saying since the beginning of the year, the reflation trade really began to be very pronounced at the beginning of the 4th quarter, and as different industries are recovering from the quarantine at different speeds, what we said at the beginning of the year was that this creates a lot of opportunities in the event-driven space, because certain areas such as technology recovered much more quickly, and this creates M&A and other activist and distressed and restructuring opportunities within the event-driven space. So it's not surprising that we've seen 2 of the strongest areas of performance in the event-driven space thus far for the year. We encourage you all to visit our website, www.hfr.com, for we have a lot of great information there and resources talking about HFRI 500 indices. If you're watching this video, you're well aware of the HFRI 500 YouTube channel. We have all of the past videos on there. In addition, visit the website and download the HFRI 500 Investor Guidebook, which really talks about how institutions in the US and throughout the world are using the HFR 500 as a solution to common benchmarking problems. If you'd like to set up a call to discuss any of the materials that you see on the website, or to hear about how the HFRI 500 could work as a solution for your institution, please feel free to email me, Ken Heinz. You can email indices at HFR or HFRI500@hfr.com, and we look forward to hearing from you, and we look forward to recording the video for next month.